Welcome to our new IFRS Education Fund series. It's an initiative of OJ Innovation Limited. It is dedicated to providing complementary and supplementary education on International Financial Reporting Standards IFRS through a multi-choice question and answer approach. It is intended to make learning verification, mastery, and intellectual assurance fun. In this session, we shall be considering cumulative set 210 questions to read the answers that have been provided on IAS 34. This is the standard on interim financial reporting. Viewers and subscribers have 30 seconds to select or choose their answer to each question. The answers to the cumulative 10 questions are reviewed at the end of all the questions. Please enjoy it. Question number 11. With respect to the use of accounting estimates, what applies? A. Interim financial reports and annual financial reports require same use of estimation methods. B. Interim financial reports require less use of estimation methods than annual financial reports. C. Interim financial reports have no similarity with estimation methods used in annual financial reports. D. Interim financial reports require greater use of estimation methods than annual financial reports. E. Use of estimation method is optional in interim financial reports, but it is compulsory in annual financial reports. Some counts. Ten seconds gone. Time up. Question number 12. The sum of the revenue for 6 months will not be equal to 50% of an annual revenue, except revenue being A, even, B, occasional, C, cyclical, D, seasonal, E, staggering. Some counts. Ten seconds gone. Twenty seconds gone. Time up. Question number 13. Which of the following is correct about IAS 34? A. Mandates which entities are required to publish interim financial reports. B. Stipulates frequency of publishing interim financial reports. C. Applies if an entity elects to publish interim financial reports. D. Prescribes how soon an entity publishes its interim financial report after the end of an interim period. E. Guides the adjustments made to annual financial reports to arrive at interim financial reports. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 14. One of the following is not the purpose of IAS 34 as to the prescribing of principles for A. Presentation of items in interim financial reports. B. Recognition in complete set of financial statements for an interim period. C. Measurement in complete set of financial statements for an interim period. D. Recognition in condensed financial statements for an interim period. E. Recognition and measurement in complete set of financial statements for an interim period. Some counts. 10 seconds gone. 20 seconds gone. Time up. Question number 15. Interim financial reports cannot be prepared on the basis of A. Separate financial statements. B. Individual financial statements. C. Consolidated financial statements. D. Joint operations financial statements. E. Both separate and consolidated financial statements. Time counts. 10 seconds done. 20 seconds done. 'Up. Question number 16. An interim financial report includes, among others, A. Selected statement of financial position. B. Selected statement of comprehensive income. C. Selected statements of changes to equity. D. Selected statements of cash flows. E. Selected explanatory notes. Some counts. 10 seconds done. 20 seconds done. 'Up. Question number 17. When there is a change in the accounting estimate reported in a prior interim period, the change in the accounting estimate is A. Retrospectively adjusted in the prior interim period. B. Not retrospectively adjusted in the prior interim period. C. Prospectively adjusted in the prior interim period. D. Retrospectively adjusted in the current interim period. E. Not prospectively adjusted in the current interim period. Some counts. 10 seconds done. 20 seconds done. 'Up. Question number 18. An entity that mandatorily applies one of the following is bound to apply IAS 34. A. IAS 2. B. IAS 20. C. IAS 33. D. IFRS 11. E. IFRS 13. Time counts. 10 seconds done. 20 seconds done. 'Up. Question number 19. Which of the following standards is not applied in interim financial reporting? A. IAS 1. B. IAS 2. C. IAS 7. D. IAS 8. E. None of the above. Time counts. 10 seconds done. 20 seconds done. 'Up. Which of the following is not proportional on a period to date basis in interim financial reporting? A. Statement of financial position. B. Selected statement of changes in equity. D. Selected statement of cash flows. Some counts. 10 seconds done. 20 seconds done. 10 seconds done. 20 seconds done. 'Up. Question number 20. Which of the following is not proportional on a period to date basis in interim financial reporting? A. Statement of financial position. B. Statement of profit or loss. C. Statement of comprehensive income. D. Statement of changes in equity. E. Statement of cash flows. Time counts. 10 seconds done. 20 seconds done. 'Up. We proceed to review the answers. Question number 11. The answer to question number 11 is D. Interim financial reports require greater use of estimation methods than annual financial reports. IAS 34 provides that while measurements in both annual and interim financial reports are often based on reasonable estimates, the preparation of interim financial reports generally will require a greater use of estimation methods than annual financial reports. D is the answer to question number 11. Question number 12. The answer to question number 12 is A, even. When revenue is even, the monthly revenue is proportional to the annual or total revenue directly. Therefore, 6-month revenue will translate to 50% revenue in a 12-month year. The conditions in the other option do not lead to proportionality and thus cannot translate to the proportion stated in the question. A is the answer to question number 12. Question number 13. The answer to question number 13 is C, applies if an entity elects to publish interim financial reports. IAS 34 provides that it is applied if an entity required or elects to publish an interim financial report in accordance with International Financial Reporting Standards, IFRS. C is the answer to question number 13. Question number 14. The answer to question number 14 is A, presentation of items in interim financial reports. The objective of IAS 34 is to prescribe the minimum contents of an interim financial report and to prescribe the principles for the recognition and measurement in complete uncondensed financial statements for an interim period. IAS 34 interim financial reporting does not prescribe the principles for the presentation of items in interim financial reports. A is the answer to question number 14. Question number 15. The answer to question number 15 is D, joint operations financial statements. Joint operations financial statements do not exist under IFRS. With respect to IFRS 11, joint operator is a party to a joint arrangement that accounts for its contributions and undertakings for asset and liability respectively in its own books. IAS 34 permits interim financial reports to be included or to be provided or to be produced or presented for individual, separate, or consolidated financial statements. D is the answer to question number 15. Question number 16. The answer to question number 16 is E, selected explanatory notes. An interim financial report at a minimum includes 1, a condensed statement of financial position. 2, a condensed statement or condensed statements of profit or loss and other comprehensive income. 3, a condensed statement of changes in equity. 4, a condensed statement of cash flows. And 5, selected explanatory notes. The minimum are the condensed forms of the mentioned components of financial statements, and the full forms can also be reported in the interim report. However, no selected nature of these are contained in an interim financial report as outlined in the options, except for selected explanatory notes. E is the answer to question number 16. Question number 17. The answer to question number 17 is B, not retrospectively adjusted in the prior interim period. IAS 34 prescribes that amounts of income and expenses reported in the current interim period will reflect any changes in estimates of amounts reported in prior interim periods for the financial year. The amounts reported in prior interim periods are not retrospectively adjusted. B is the answer to question number 17. Question number 18. The answer to question number 18 is C, IAS 33. IAS 33 earnings per share is mandatorily applicable to entities whose shares are quoted or traded in a public market, or that file or is in the process of filing to achieve being quoted or traded. IAS 34 primarily goes with those categories of entities that are quoted or intended to be quoted because interim financial reports are required of them accordingly. Application of IAS 2 inventories, IAS 20 accounting for government grants and disclosure of government assistance, IFRS 11 joint arrangements, and IFRS 13 fair value measurement do not have any connotation that an entity's shares are traded or are so intended. C is the answer to question number 18. Question number 19. The answer to question number 19 is E, none of the above. All standards are applicable in interim financial reporting where transactions, events, or conditions relating to the standards exist. E is the answer to question number 19. Question number 20. The answer to question number 20 is A, statement of financial position. Statement of financial position is not proportional on a period-to-date basis in interim financial reporting. It is a statement of all assets, liabilities, and components of equity at a particular date, and it is total. All other statements in the options are for a proportion or part of a cycle, which is what is reported in interim financial reporting. A is the answer to question number 20. That is all for this set 2. Thank you for joining us for this set 2 of IAS 34, Interim Financial Reporting. We invite you to subscribe to our channel, share our links, and invite those in your network to do the same. This will enable you and all other subscribers get direct notifications on future video uploads. We intend to cover all of the standards in this framework and create further sets of questions and answers on standards already covered. For collaboration in this area, please call or WhatsApp +2349 030 770109. All rights to this production and others in the series are reserved for OJ Institution Limited. Thank you once again, and bye for now.